Good morning and welcome to the OFX Currency Corner. With the Australian dollar seemingly range-bound between 12-month lows at 73.20 and those key technical resistance levels at 74.30, and of course little on the domestic docket really driving that broader direction story, we're going to focus on a few key offshore events that are painting the picture and the narrative for the Australian dollar moving forward. We've seen an escalation in currency war and trade war talk over the last week weigh on that global risk appetite, and of course the Australian dollar being vulnerable to a slowdown in global growth has really seen that 74.30 handle be a key point to marking that topside range. We also look at the devaluation of the Chinese yuan over the last month, which has fallen some 6% and fell another 0.4% overnight as well. That exposure to China and that value chain is certainly hampering those further upside moves for the Australian dollar. But in saying that, the US dollar advance is starting to run out of steam and we're reasonably well supported around these 73.20 levels. The question is, where will that next catalyst come from? The Bank of Japan is rumoured to change its policy on yield curve control, and with Japanese investors being key players in global market equities chasing that higher yield, any shift that brings them back to Japanese government bonds could see a broader change in those valuations of currency markets. Of course, as well, we put our focus on two key macroeconomic events this week, with our own CPI data out tomorrow and perhaps the more important ticket, US advanced GDP numbers for Q2. A print between 4 to 5% will be key in driving that US economic growth story. But for more direction, you can contact our dealing teams.